Question is, will we get a duty and how much will be enough? To help us out with an understanding, we have Aditya Velekar, the Senior Research Analyst at Axis Securities, who joins us on the show. Hi, Aditya. What's your take? If you could tell us right now, what is the landed cost of imported steel coming in from China? That compares with the domestic prices. I understand the domestic prices are still at a premium. So what is that difference? And how much do you think will be enough to nullify that?
Yeah, good morning, Nigel. So thanks for having me on the show. So currently, Indian HRC prices are at 8% premium to Chinese HRC prices, and based on the 7.5% customs duty. So if we increase that customs duty to 12%, then that premium will fall to 4%, which is still not at parity with the Chinese prices. So in order to bring it at parity with the Chinese prices, the customs duty will have to increase to 18%, 17 to 18%. So then only the premium falls to 0%.
Okay, Aditya, so, that's a tall ask to get 16-17% protection. But Aditya, in the past, we have seen, right, Indian steel is normally at a 4-5% premium, I think. Currently, it's higher, but normally that's par for the course.
Yes, ideally, the domestic HRC prices should trade at a slight discount to imported prices in order to incentivize the domestic steel to be the first priority for consumption. Ideally, that should be the case. Currently, the premium is slightly higher at 8%, and even if we go for customs duty hike up to 18%, then the premium falls to zero. So it needs to be above 18% in order to incentivize the domestic steel mills to push their material in the domestic market.
Right. Aditya, has this situation been like this for a while, or something has that gap increased quite meaningfully very quickly recently? I'm just trying to understand what will catalyze action from the government, and should we expect something now?
Yeah, so to put this in perspective, I guess the spot spreads have fallen from almost $450 per ton in last year to the current $350 per ton range. So that is the kind of impact because of this fall in HRC prices, despite taking into consideration the softening of the coking coal and iron ore prices. So if we see on a quarter-on-quarter basis, the spot spreads are down by 1 to 2%. But on a year-on-year basis,
for our viewers, Aditya, what do you mean spot spreads?
So it's the difference between the HRC prices and the prime raw material, that is coking coal and iron ore. So that spread has,
yeah. Go on,
yeah.
please.
Yeah, so the fall in steel prices has intensified from the month of May. So if we consider the recent peak that was in the month of May, so HRC prices have softened from that level by 10 to 11% in Indian market, and even higher level in Chinese market by 15%. So this is the trigger where now the dumping from the Chinese prices has intensified, because they are offering their HRC prices in the range of $462 per ton on a FOB basis. So which is the drop in HRC prices in China is at a higher quantum by 15%. So that is putting pressure. The regional fall in HRC prices in these countries like China, Vietnam, Japan. So that is putting pressure on the domestic steel prices.
Aditya, so I'm going back to that number you made. You said 17 to 18%. That is the kind of increase in tariff we need to protect domestic producers. Now, we don't know how this, raising the customs duty itself may not happen. You might have this anti-dumping duty as an additional duty, right? So total tariff goes up to that level. Apparently, I was reading that investigations have been opened into Vietnam as well, dumping of steel from Vietnam. So that's also a concern. In the past, whenever steel has enjoyed an anti-dumping duty, typically what is the kind of range? So realistically, the minister himself is saying that he'll push for 10 to 12%. Mr. Jindal is saying even that will not be enough. But realistically, in the past, if we go by history, then what is the kind of anti-dumping levy that the steel sector has managed to get in the past? So then we work with that at least as a reference.
So I recall, so currently the customs duty is 7.5%, and that is only for China. For countries like Vietnam and where we have the FTA, that is free trade agreement, there is no customs duty for the steel imports from these FTA exempted countries. So The problem is the China is rerouting its steel from the countries where there is an exemption from customs duty perspective. So either the FTA, the point is means either we have to increase the customs duty on China, but that will also get circumvented if they route the steel from these free trade agreement countries. So the recent customs duty which we have seen is 7.5%, and I don't recall more than that as a customs duty we have put in the past.
Okay, Aditya. So the big takeaway is that that duty needs to go to 17-18% to totally protect the domestic steel industry. And I think we'll have to keep an eye out on what's going on in China because pricing is weak out there. They're consuming less. And because they're consuming less, they're exporting more, which is putting the entire global industry in a bit of a tizzy. Appreciate you joining in, Aditya, and giving us all those cues.
You know, it's not just steel, right? The latest estimates say that they won't grow 5% in China this year. 5%. I mean, that's a country which grew at 10% plus, like clockwork for 20 years. And now we're not. So I think it's everything. But it's interesting, this entire tariff argument, right? Just yesterday, there was a news item which said, and I think we reported it as well, where a lot of the industry, not steel, but other industries were saying that we should actually have easier imports, etc., for industries where we don't have capacity still built up.
So there are some protests in areas like Ludhiana, the MSME sector over there.
Who are saying
let it come. What's the problem? Because we like cheap steel, but obviously, you know, that's the delicate balancing act that I guess the government has to look at.
Yeah, but you know, it's tariffs. I mean, generally are going up around the world, especially with regards to steel and everything else, of course, which is going to go out of China because they've got, of course, the largest capacities for pretty much everything.